Hello and welcome to another episode, I should say. No, I'll say edition of Skills to Pay the Bills. I'm James Jack. I'm with Ernestine J. Wilson Real Estate. We're licensed real estate brokers in Washington, D.C. and Maryland. And with me today is a very good friend of mine, and I guess you could say an industry associate, Mr. Vinny Apostolica of McLean Mortgage. He's going to talk about mortgages today and all the types of things that you need to know, whether you're a first-time buyer or you've been around the barnyard many times. Welcome to the show.
Thanks very much, James. Appreciate it.
Okay, first, a little background. What makes you so competent to speak on behalf of the mortgage industry?
Well, I got in the mortgage business in 1993. Started out at a small broker shop, actually a small lender shop. And 1994, I went to a seminar, Joe Stump, called Buy Referral Only. Went to it. It really blew me away. I learned a tremendous amount on, when you start working with a client, your goal is for them to be so happy that they want to come back to you over and over again and refer you. Okay. When I first got in the business, I was taught never to work with anybody you know. I kid you not, right off the bat. So I learned from a gentleman to take a loan app in 20 minutes, get it in and out, go to the next one. Thank God, early on, I immediately went to the Joe Stump conference, and he completely turned me around on that. So because of that, I started out in 1993. By 1998, I had helped 200 families in that 1 year. 51 were family and friends and their referrals. So very excited. All the people you know, you want them to obviously work with you. Since then, I've been in the business for, April is 20 years. So I've been in it for a long time. I've helped a lot of families purchase and finance real estate, and handle their mortgages. Last year was obviously a huge year, but I opened my own company in 2002, had a broker shop, and did that all the way through 2010. And now I've been at McLean Mortgage for about 3.5 years. Awesome company. The year before we did $650 million. Last year, $1.5 billion. So I think this January will be the 5th year McLean's been in business. So I'm very fortunate to be at a great mortgage company and a branch manager leading a great team. So,
How many of those billions were you able to keep?
I wasn't able to keep any of the billions, but I helped a lot of families. Did a little over 60 million personal production with myself and my wife. And I have an additional loan partner on a team, so we have a 3-person team. And our branch was able to help quite a few families. Our branch did 300 million last year. And so we're growing and expanding. And it's all about one person and one family at a time, where you're able to sit down with them, go over what their loan needs are, and really how does their loan fit into their total financial plan so they can become financially independent. I mean, you're putting someone into debt, you're taking, I think, a huge responsibility, and make sure you put them in the best loan program, the best loan product, and really go over their money with them. So I think it's an honor to work with people from the mortgage perspective as a liability advisor.
Okay, so you've been around the bend twice. 93, we had basically somewhat of a recession, somewhat of a downturn.
90, yeah.
Yeah, picked back up very quickly. Then, of course, the last 4 or 5 years, never seen it before. As they are saying, not since the Depression, but we made it through that.
Yep.
So now we've got a new wave of new home buyers. I don't mean just buying new homes, but people who've never bought a home before. They walk into your office, walk me through the process of making them feel comfortable with getting a loan from you.
Okay, great. Actually, it's a great question, because most people, I believe right now, all they want to do is, or they take a phone call, or they go on the internet and they look to get, quote, pre-approved. Because if someone's going to go out and buy a house, imagine if you're a real estate agent, you work for a real estate company. Imagine you taking a buyer out to look at a house without being pre-approved, without knowing 100% that they can buy it.
Stop one moment here. The difference between pre-approval and pre-qualification, that always comes up. People come to me and they say, I've been pre-qualified. Not enough. Could you explain more?
Yeah, I think people, they might put some information in the computer and get, quote, a pre-qualification, or talk to a loan officer and give them some information over the phone, okay? And then, quote, they're pre-qualified and they can buy. I have seen a lot of those pre-qualification letters, and I know you guys have,
Yeah.
where it's not worth the paper it's on. Getting pre-approved, I think, is very important, especially in today's market. And really what it entails to do it properly is to make sure that you bring in all your documents up front to the loan officer that you're working with. For instance, if you're a salaried employee, W-2s for the last 2 years, 1 month pay stubs, 2 months bank and asset account statements. Okay, your federal tax returns. Now we're able to really put a comprehensive package together, because the last thing you want to happen, and of course run your credit, is for someone to not do all that work. You then go out, take them out, and they buy a house. They come back in, they've got a ratified sales contract, then start collecting the docs, and then find out a week before settlement, oh, we didn't see that they had unreimbursed employee expenses on their tax return, and they don't qualify.
Well, quite frankly, I'm not taking anybody out unless they've been pre-approved and unless I can talk to their banker or their mortgage broker or, well, whoever else is involved that can guarantee me that this person can buy that loan if their contract or their offer is accepted. So now we're at the point where they come in, you sit down with them, you get them prepared.
Okay. Well, here's what I want them to walk away with. Okay, 3 things. I want them to know their down payment and down payment options, their monthly payment, and their closing costs. Okay, so when they come in, there's a lot of different ways to finance a house. You got a lot of people that are first-time home buyers and don't have very much money. There's a lot of low down payment programs. There's people still that might be a first-time home buyer, but they're getting a gift, or they've actually saved a little more money and they've got money to put down. What's the best strategy? So we like to put that together, give them their options, and figure out the best strategy for them. There's not one strategy that's right for all of us. There's an individual strategy per that person's goals, per their credit score, per their financial situation, per their house price. Okay,
What about when someone comes to you through me and they found a new home, the builder says, I can give you the best financing possible, but wouldn't it be a good idea for them to talk to someone like you and make a comparison to see whether or not that's just, the carrot on the stick, or in fact, it's a better deal than they would get from you?
I believe they should talk to us. I'll tell you why, okay? Jack of all trades or a master of nothing, okay? I do residential mortgages. You've got the builders that are experts at building homes. They are the masters, okay? They can go in, find a lot or a piece of land, they can develop it, they can build houses, then they're gonna sell them. But they've also got involved with mortgage companies because they want a piece of the mortgage pie too. What I have found out every single time that I've met with a client that had to go through the builder's lender and didn't have the option of going to someone like me is that, let's say the builder's paying $8,000 in closing costs, their loan every time is $8,000 more expensive than mine. Mm-hmm. So yes, they should come talk to us and make sure that they, that we run through the numbers for them and make sure that, what's really best for them, isn't always what's best for the builder's mortgage company. So,
Okay.
not that it's bad. Sometimes they should just know where they're standing. I think just like if I'm going to court, I want to make sure that I'm not going to let the prosecuting attorney represent me. I want a defense attorney. Okay.
Right.
I want to know that
Right.
someone's got my back, and I think it's important when you're handling your largest financial transaction that you've got someone that's got your back.
Okay, quick note. If you want to call Vinny and get the real deal in terms of information, because information is the key to purchasing, you'll discover that sometimes you can have a lot of money, but you're still not qualified or anything else, then I want you to call 703-738-0923, just so that he can explain some of the things that we're talking about now more in depth. You would be surprised. As I learned when I used to do mortgages myself a long time ago, your paperwork probably will go through the hands of maybe 55 to 60 people nowadays. At any point, someone can say no, and it goes back. So if a little bit of preparation in the beginning is going to help you to get through the process, then someone who knows what they're doing should be able to answer questions for you ahead of time. And just watching this program, you may say to yourself, well, I'm thinking about this or I'm thinking about that. So, as I said before, write the number down, 703-738-0923. And that doesn't mean that Vinny wants to be your only mortgage broker, banker, or whatever the case may be. You may be working with somebody else, but if you have a question and you think that now is the time for me to call this person and get an answer to something that maybe your broker doesn't know, then you should give him a call. Now,
What about closing costs? So based on where someone's buying, not only their down payment, they want to know their monthly payment, which is critical. What part is tax deductible to me? Is my mortgage insurance tax deductible? It is for certain people based on their income. What is mortgage insurance? You know, there's a lot of different pieces, but what part of my payment is tax deductible is actually huge. Right now, we're seeing people are buying homes, first-time homes. It's cheaper than renting, period. It's only the second time since I've seen that, since I've been in the business, that you can do that. And then bottom line is, how much is it going to cost me? I got my down payment, I have my closing costs. I always love looking at this. Let's say you're going to sell me your car for 10 grand. You'll sell it to me for $10,600 and pay $600 at the DMV for transfer fees. So if you'll buy a house for $380,000, will you buy it for $386 and have the seller pay $6,000 in closing? Now, that's not advice. I'm just saying that's in the lender laws that you may be able to do. It depends really on how you and your realtor want to go over this. Also, armed with a pre-approval letter, it's extremely powerful. Because when you go in to make an offer on a house, if you are not pre-approved, I don't know anybody that will write an offer for you. And in this competitive market with escalation clauses, there's a lack of inventory. From what I'm hearing in this area, you have to have that pre-approval letter. Every time the listing agent, when they receive it, calls me and make sure, did I run the credit? Have I received their docs? Do they have assets for closing? So very powerful.
And over the past couple of years since the downturn, a lot of things have changed. The federal government has stepped in, state governments have stepped in, and they say no more of what we had in the past 4 or 5 years. So that means that that the buyer should be prepared, and to be prepared, they need to have someone to go over all these little minute details one by one against a checklist, and to say, okay, before you even go out looking for a house, here's what you need to do it right the first time, and we'll minimize the number of problems that we've had. We're going to take a break in just a moment, but first of all, I want to remind everybody that Vinny Apostolica is a very good loan officer, broker, banker, jack of all of the best. Call him at 703-738-0923. Of course, he's on the web. I'll give you more information about how to email him and everything else after we take a break. And of course, if you want to talk to me, you can always give me a call at 301-306-5314. I'm with Ernestine J. Wilson Real Estate. I'm James Jack, and we're on the web at www.homesradio.com. We're going to be right back in just a moment, and we're going to pick up with where we left off with this laundry list of things that people need to know. Thank you.
Hello? Patty, I've decided to follow your lead and file for Social Security benefits online.
But Kath, aren't you back in Zanzibar?
I just got on my laptop and went to socialsecurity.gov. It took less than 15 minutes.
Wow, you are a miracle worker.
Well, cheers, Patty. I'm off to film a baby rhino.
Baby rhino?
Welcome back to Skills to Pay the Bills. I'm James Jack with Ernestine J. Wilson Real Estate. We're licensed realtors in Maryland, D.C., and Virginia. And we've been doing this for a long time. We've helped a lot of people buy homes, but what makes our job a lot easier is when we have associates in the business, not necessarily other realtors, but mortgage brokers, bankers, lenders, who help us to help that person, their family, get into the home of their choice. So with me today again is Mr. Vinny Apostolica. He is a licensed, savvy, seasoned lender, broker, banker.
Thank you.
All right. So a few minutes ago, I walked into your office. I know nothing about loans. All I know is I saw this beautiful house. My wife and I want to buy it. We've never bought a house before. You've already bombarded me with lots of information. Could you break it down just a little bit more so that when I walk away, I have a better idea as to what I need to do to make sure that when I make my offer to the seller or the builder, then I'm probably in a better position than I was half an hour ago.
Okay. Well, first thing we'll do is make sure you have a list of docs of everything that you need. So when you bring those to the office, or if you email them in, we'll have all your documents. So when we go over your documents, we can make sure that we do our job and make sure make sure you fit within the guidelines of the program that we're based on your comfort level and what you actually can get qualified for. We'll put you in.
A couple of those docs again.
W-2s for the last 2 years, 1 month pay stubs, latest 1 month pay stubs, latest 2 months bank and asset account statements. We want to make sure that you actually can afford the loan through current income, and you have a track record. We want to make sure that you have the money to put down and you have the money for closing costs. And also, most of the lenders, depending on the program, require reserves to show that you showed a savings pattern. We also run your credit. That's a good capacity of character. Do you pay your bills on time? Based on credit score, you can get a better interest rate, or you might pay a little higher. It just depends on that. We take all that information, put it together, and then based on your goals and then what you can actually do, we come up and actually get you pre-approved. We can run your loan through underwriting, and based on the data that you provided and all the information we have, we can actually get somebody pre-approved, so they've got an approval letter in their hand when they leave our office and know their down payment, monthly payment, and closing costs. So they can, then when they meet with Ernestine, or their realtor that they're using, they're prepared to actually make an offer on a house and make sure that they can actually get that purchase.
Okay, I come into your office on Wednesday. You told me which docs to bring and everything else. Under normal circumstances, when will I be prepared to walk into a house and say, this is mine, suppose I see one on Saturday. Am I ready?
Well, if you came in Wednesday, let's say Wednesday at 4, and you brought me all your docs, most likely by 5:15, I could issue an approval letter for you. If you brought all your docs, we ran your credit, we verified the information in there, which is easy to do. I basically, the majority of the time, will run the loan through Fannie Mae. Make sure I got, Fannie Mae is a lot of people have heard of Fannie Mae and Freddie Mac. We run it through their guidelines. If it fits their guidelines, the lenders buy those type of loans.
They tend to be very stringent too.
Yes. Well, let's say if this is the guideline right here, and you're inside it, you're going to get your loan. If it's when you're over that guideline is when it's a little trickier. Okay. So there may be compensating factors. We could have someone that has an extremely high credit score, been in their job for a long period of time, and they're qualifying. Their debt-to-income ratio is maybe just a little bit high. But we run it through automated underwriting. We get an approval for them on the spot with their current pay, et cetera, okay, and their credit score, and get an approval. Based on that approval, yes, they could go out, if that was at 5:15, they could go out and write a contract at 5:16, purchase a house at 5:16, and we could do that loan for them. We also give them a pre-approval letter, so they have a letter. Now, I like to write the letter based on the contract they're looking to make an offer on. Why give all your cards away if you don't need to? Because I work for the buyer, the person that's in there looking to get pre-approved and wants to go purchase a house. We want to make sure that we've got their back. So when they're writing an offer, let's say they're writing an offer on a house for $350, okay, but they're approved for $600. Do we want to let them know that they can go higher, or do we want to have some doubt in the seller's mind? And that's really all up. That's really based on how the buyer and the real estate agent view that, based on the current market, on how you want me to do it. But that's how I write it. I'll do it for the client based on what they're looking to do.
Okay, so what I'm hearing is this. They come into the office, they have all their docs, hour and a half, 2 hours later,
At
you
max,
can write a pre-approval letter for them. However,
I've done it on the phone in 20 minutes. They've
Right.
emailed me their docs, and we put them all together. 20 minutes later, I've issued an approval letter. They go write a contract.
so this is a ticket. It gets you to the airport, but it still has to be processed
Yes.
by, before you can get through the gate. Meaning, you find a house on Saturday or Sunday at an open house. I want this house. Okay, you have a pre-approval letter but the parameters are a little different in terms of price or what you think may be to your advantage if then he takes another look at the contract, the offer that you're going to be making. He may say, well, we may need to change the letter a little bit or whatever.
Correct.
You want to see the contract because you want to see what else is in there other than just the fact that you may need or that person may need another pre-approval letter. What are you looking for in the contract?
Well, let's say they go write the contract. They write a contract on, we pre-approve them on Wednesday, they write a contract on Saturday, okay? They call me up Monday morning, and we schedule an appointment. Let's say they come in, okay, or email everything in. At that point, I want to read the contract, look at the settlement date, look at the financing contingency. That's pretty important, right? I mean, when does the loan have to be approved by? Otherwise, you're in default to contract. So we want to make sure we meet that contingency and what's in it. We have to order an appraisal on the property. I'm sure the borrower wants to know what the property is worth. So does the bank, right? So we want to know what the property is worth.
I want to time out just for a second.
Yes.
You threw a nice little one in there. The appraisal. Most people are not aware of the fact that they're going to need an extra $400 or $500 for the appraisal. They think that they're coming in, everything is done, they pay all this at settlement. It used to be that way. So before you pick up where you left off, would you tell them a little bit about the appraisal process and why it's necessary to have a little bit of money in the bank to take care of these things?
Well, when they leave my office on the pre-approval, or if we email it to them, they get an itemized fee worksheet that goes over every fee, and it includes the appraisal up front that they're going to pay before they go to settlement. It includes their one-year homeowner's insurance that they're going to pay before they go to settlement. So we put every cost involved.
But I thought my insurance was being paid every month with my pay. Why have I got to pay my home insurance, my hazard insurance ahead of time?
Well, what if a tree fell on your house the day you closed? The bank wants their house covered.
Well,
so.
well, one of those insurance companies says that I'm protected against mayhem. So.
Well, basically, that's yeah. Well, I go over all that on the estimate. It has everything. It has the escrows that they have to put in up front for their taxes and insurance, because in 6 months, when the tax bill comes due, the mortgage company pays it. In 1 year, when the homeowner's insurance bill comes due, the mortgage company pays it. And you know, the only thing that comes before a first mortgage lien is a tax lien. So obviously, the mortgage company wants to pay your taxes and insurance, because if let's say you forgot to make that homeowner's insurance bill payment, and something happened, you know, the bank owns your house, not you. Like,
Well, you would be surprised the number of people who told me afterwards, well, you never told me anything about taxes. I did explain it to you, and the lender explained it to you again. So a lot of people don't understand the concept of forward paying and backwards paying dependent upon the jurisdiction that they're in. So they don't see how the tax fits in with the mortgage payment themselves.
Yeah.
You know, the builder says, you can buy this house for $250,000. This is what your mortgage payment will be. That does not necessarily include, taxes and other things, or that doesn't necessarily include how the APR was calculated, during that first year or whatever the case may be. So when people come in, and if you have the time, you explain those things to them too.
Absolutely, absolutely. We go over their entire estimate. Like I said, we go over their down payment, their monthly payment, and their monthly payment includes principal and interest, based on their loan and their interest rate. And I would say 98% of the loans we're doing right now is fixed rate mortgages. When rates are at an all-time low in history, it's pretty simple, that's what you should do. But not always. Okay. So we go over their principal and interest, their homeowner's insurance on their house, their taxes, if they have mortgage insurance or not, their HOA fee, so they know their total payment, everything inclusive. Now, once they write a contract, they're going to come back in and we're going to update all the numbers, because okay, now here's your new price. What are the taxes? So we'll get the listing sheet, look at the taxes. We'll look at how much if there's an HOA fee or if there's no HOA fee. Mortgage insurance, there's a bunch of different ways we can do it. We can do it where they pay a fee up front and have none. I mean, if you put less than 20% down, you have mortgage insurance. There's ways to actually have zero mortgage insurance by paying a little more up front, or to have a monthly based on credit score. Someone with a higher credit score would actually pay a lot less than someone else with a lower credit score on mortgage insurance. A lot of different ways we can structure a loan, but they do know that up front. When they come in, okay, that's when we fine-tune all the numbers for them. All my estimates are high. So when a client comes in, let's say they're looking for a $360,000 house, they buy a 370 house, 360, 370. When they go over the estimate, it will be a little less when they come in, because I always do my figures high. The last thing you want to do, I believe, is buy a house. You tell me, James. Imagine if I gave you an estimate. You bought a house, and after you bought the house and you came in, you've got a signed contract, and you find out that it's a couple $1,000s more. Okay, your payment is a couple $100s higher. How happy would you be?
I'll tell you one thing, I would name my next bout of heartburn after you, because I would not sleep that night. I want as much information as you can give me so that I can prepare myself ahead of time, even if it takes me 2 or 3 nights of sitting and reading it and reading it and redlining it and highlighting it and everything else, because I want to know. This is the single most important or the biggest investment that I'm going to make aside from the education of my kids and my retirement. I want information. Now, we only have a minute, so I want to wrap it up by inviting you back again, because there are other things we need to talk about. We just talked about the first-time home buyer. We need to talk about refinancing, and also people who are looking to, say, maybe buy retirement or something like that. So would you like to come back?
Absolutely. You know, refinancing, a lot of people are refinancing with rates at all-time lows.
Wait a minute. Hold that thought. You'll be here until tomorrow. I want to thank Vinny Apostolico again. He's a locally based Northern Virginia loan officer, broker, banker, all those things, whatever. I'm James Jack. I'm with Ernestine J. Wilson Real Estate. You can reach me at 301-306-5314, on the web at homesradio.com, and you can reach Vinny Apostolico at any time by calling him 703-738-0923, or email him your questions. He will return your email. That's vapostolico@mcleanmortgage.com. Once again, I want to thank you, Vinny, for coming in. I know you'll be back again. We're going to talk a lot more about homes. Until then, thank you very much.